We felt scattered. I thought, why do we have two different financial advisors? One's doing one thing, one's doing another thing.
We felt sometimes like we were being guided in directions to spend extra money on things that probably weren't always necessary for us.
I would not know for sure if I should put my money in here or put it in there. Should I buy this real estate?
Like, I don't know what to do with this money, and I don't want to just blow it and spend it.
We were concerned about our financial health and just wanted a better financial picture.
And so when Earned came onto our radar and we sat down with our financial advisor, it just felt different.
I think a physician specifically should look at Earned because the focus is on our field. They know what a physician goes through at different phases of our career. To have that knowledge in order to guide us, I think is just such an advantage.
Earned isn't just about giving us financial advice. They're about doing the things that are needed to be done in order for you to fulfill your financial plan that they have created with you. And that really was very meaningful to me.
Earned is kind of like the conductor of an orchestra. You know, you pull in the trombones, you pull in the trumpets, you pull in the percussion. But Earned is the one that's holding the baton. I feel trust that they're taking care of my entire financial picture, not just one little part of it.
As a physician, I know that what I do for people is really powerful and impactful, and it's important for me to know that the level of expertise that I'm working with for my financial health is there, and I have that trust for them.
It's definitely valuable because I don't have to go looking a million different places. Like, I don't have a lawyer over here, and I don't have, the insurance thing over here. Everything's under one roof.
Earned brings clarity to my financial life.
With Earned, I feel really well taken care of.
I feel my financial health is secure.
I feel supported.
Earned is security.
I would highly recommend any doctor to look at Earned.
I love what I do, and it's really important for me that my patients have the utmost trust that I'm taking the best care of them. I have that same amount of trust with my financial advisors at Earned.
Hello, everyone, and welcome. We are so excited that you are here joining us today to talk about the Physician's Guide to Disability and Life Insurance Coverage, brought to you by Earned and Physician on Fire. I'm Amber Eckerfield, Marketing Manager of Education and Experiences at Earned, and I will be your moderator for this webinar. As many of you know, Earned is a longtime partner of Physician on Fire, the first fully comprehensive tax and wealth firm built specifically for doctors, their families, and their practices. We bring tax planning, investing, retirement strategies, practice level advice, and now insurance and legal coordination all under one roof so your whole financial life works together. Before we get started, a few housekeeping notes. We have some polls today. So we'd love to learn more about you. Click on the polls icon at the bottom of your screen. If you do not see the polls icon there, click on the apps icon and then click on polls. We'd love to get to know you, see where you're at with your insurance journey, and really, understand our audience so we could better serve you. As always, we really want you to be as integrated and participating as much as possible. Please say hello in that chat on the right-hand side. Tell us where you're joining us from. If you need some technological help, please let me know. As always, we end our webinar with a live Q&A. If you have questions, click on that questions chat, enter that question, and we are happy to answer that at the end of the webinar. We have a really packed lineup today. We're going to go through disability insurance, life insurance, how to read that policy, going through the application process, why physician advocacy matters, and then what you need to do now after all this information that you're going to get today is super valuable, and you can act on that. We are excited to have Jorge and Stephanie on with us today. As many of you know, Jorge leads the Physician on Fire community and has been a long trusted voice for physicians pursuing financial independence and long-term clarity. Jorge, I'd love for you to join me and welcome our audience before we bring on Dr. Pearson. It's a really interesting topic today, so I'd love to hear from you. Welcome.
Hey, everyone. Thank you, Amber. Welcome, physicians, docs. Happy to be here after a long Memorial Day weekend. Again, happy to see you, Amber. Great to be working with Earned. As a physician, we go through a decade of, well, not a decade, but it feels like a decade of training. You're still paying student loans. Yet most of the physicians I know, they treat disability insurance wrong or skip it entirely. And what we have to realize, you get one bad diagnosis, one accident, and your income evaporates. So this kind of policy is your financial floor. Today, we're going to be talking with Stephanie, who Amber will introduce in more detail, but we have worked with her before. She has an amazing story. Please pay attention, because this could be you. It could be anybody. So without further ado, Amber, we're ready.
Awesome. Thanks so much, Jorge, for greeting our audience. As I said, I have the pleasure of introducing Dr. Stephanie Pearson. She has built a one-of-a-kind career that most as physicians aspire to. She's a board-certified OBGYN, a FAGHOG, a clinician who showed up fully for her patients. She was, by every measure, exactly where she was trained to be. Then, without warning, a single incident altered her reality. What happened and what came next is a story she'll share with you today. It is not an easy one, but it is one every physician in this room needs to hear. Rather than exit the profession, Dr. Pearson redirected her expertise and co-founded Pearson Ravitch, which is now a part of Earned, a nationally recognized insurance advisory firm serving physicians across all 50 states. She transformed personal adversity into one of the most credible voices in physician financial protection. Over the past 12 years, she has counseled physicians at every stage, residents, fellows, and attendings, and appeared on more than 75 podcasts and built a following of over 11,000 colleagues who turn to her for guidance on disability and life insurance, risk management, and the financial realities that medical training rarely address. Her work has been featured in Contemporary OBGYN, Doximity Op-Ed, and the many publications she's also involved in. She speaks not from theory, but from experience. And today, she's here to make sure you are better protected than she was. Please welcome Dr. Stephanie Pearson. Come join us, Stephanie. We'd love to hear your story.
Hi, good morning, everybody, and thank you for having me. Very briefly, I am an OBGYN by training, and unfortunately, during a very difficult patient delivery, I was kicked in the left shoulder by my patient, and she destroyed my shoulder and my career. I had a torn labrum. My first orthopedist kind of poo-pooed me and said that baseball pitchers pitched with torn labrums, so I should be able to do my job. And so I did what most physicians would do, and I put my head down and figured out how to compensate until I couldn't compensate anymore. I then came to find out that I had a frozen shoulder. My new orthopedist said, "Don't worry, we will get you operated on. I'll have you back to work in 12 weeks. And that was 12 and a half years ago. I did not recover the way that they had hoped. I have considerable range of motion deficits and nerve damage in my left arm. I was never cleared to do OB or operate, and I was terminated the day that my FMLA was up. Why, do you ask? Because my contract said I needed to be able to do 100% of my job duties. So while this is not a contract talk, I do highly recommend that you review your contracts as well and know how your employers could potentially let you go. I then found out that our hospital group disability insurance and fine print didn't cover work-related injuries. And so I was flatly denied and told I would have been better off if I fell off my bike. I was also initially declined my workman's comp case because they said while an injury occurred, that my frozen shoulder was either idiopathic or, worse yet, my fault because I continued to work while I was injured. I had to sue the state of Pennsylvania. I eventually settled because it was just too much. I found out that my private policy was not quite what I thought it was, and I became incredibly passionate about this topic. I truly didn't want any of my colleagues to ever go through what I went through. And that is why this company exists. And now with Earned, we are glad to be able to offer, extended services to our initial clients and be part of the family. With that, let's get started. So when we talk about disability insurance, there are things to understand from a 10,000-foot look, and there are things that are more specific to an individual. Who you are, what you are, where you are, all plays in to what makes sense. 10,000-foot look, disability insurance, more expensive for women, less expensive for men. Life insurance is the opposite, more expensive for men, less expensive for women. And it's not as sexist as it looks. It's truly based on actuarial data. Women have historically, across all fields, left the workforce more than men because of injury or illness. Men tend to die younger and more successfully at their own hands. Now, as Dr. Sanchez mentioned, a lot of physicians just forego disability insurance, or they find out that they're really underinsured. And you may be asking, why do I need disability insurance? Why do I need on-occupation coverage? Well, you want to be covered for what it is you do day in and day out. You don't want someone else telling you what you can do. And I will tell you, during my workman's comp hearing, I had a vocational specialist who actually got on stand and said that I had the aptitude to learn codes and I could be a billing secretary. And I will tell you, I have the utmost respect for all of our ancillary staff. We cannot do our jobs in a silo, but that's not what I put myself through med school, a residency, and 10 years of attendinghood to do. When we talk about disability insurance more as a commodity, now we're talking about the difference between group coverage and private coverage. Group coverage comes in two main forms: employer benefits and association benefits. I don't spend a whole lot of time on association benefits, the AMA, the American Academy of Fill in the Blank, because I've yet to really read one that's great. They are typically getting blessed because someone's paying to have them be blessed. When we look at employer benefits, the overwhelming majority are paid for by your employer. It's part of your benefits packet. It just is what it is. And so I'm going to focus on those and talk about the three areas that we see group benefits paling in comparison to a private individual policy. And it has to do with taxation, ownership, and language. If your employer is paying for your policy, any money that you would receive would be taxable. If you're paying for a policy, you're paying with post-tax dollars, any of the benefits going to come back tax-free. So tax-free money, better than taxable money. As far as ownership goes, if your employer pays for your policy or it's voluntary and they say, hey, we have it, but you have to pay for it, that doesn't matter. They own the policy. They create it, they control it, and they usually keep it. They tend to be employment dependent. So you change employers, that's not going to go with you. With a private policy, you own the policy. You should help create it. You control it. You take it with you wherever you are. The goal is get a policy while you're young and healthy, and that policy is going to be your policy wherever your career should take you. The biggest issue has to do with language. There is no standardization of language in insurance. I am convinced it's on purpose. It keeps people confused. companies can use the same phrasing and define them differently. They can use different phrasing and define them similarly. And even if a carrier has both a group product and a private product, they don't have to match. And that's where things get really confusing. I'm going to hit a few of the places, again, where group coverage tends not to share. It's usually one line on your open enrollment packet, you check a box and you move on. What we find over and over again is that there are some, I don't know, lies of omission or things they just don't outwardly share. One is, what do they actually cover? For most of them, it's a percentage of your base income, not your total income. And for academic physicians, that can be a real problem. Oftentimes, folks get paid in multiple buckets, and what you think is being covered actually isn't. And I'll tell you, for me, it did, even though I didn't get it, but our group benefit covered a percentage of our base, and my bonus was a third of my income. So even if I had gotten the coverage, it wasn't going to cover me adequately. Oftentimes, there's a maximum benefit, and that's usually a monthly benefit. While I would say the average is somewhere around $10,000 a month, I've seen it as low as $1,000 a month and as high as $35,000 a month. Why is that important? Well, this changes between training and attendinghood, but how the carriers dictate how much benefit you qualify for, when you're in training, they have set numbers. They don't actually look at your income or what your employer benefits are. Everybody qualifies for the same amount. It just is what it is. When you become an attending, the game changes. How much you qualify for is predicated on internal algorithms that look at how much money do you make, what benefits do you receive, and who pays for them, right? Because it affects taxation, and they spit out a number. And so it's really important that we understand where our group benefit falls in that algorithm. Own occupation definition. Well, they don't define it necessarily the way that we want it defined. They may say it's own occupation, but when you read the document, it may be own occupation for 2 years and then it switches to any occupation. Or they may define own occupation as what's called held to the national economy or the local labor market. It's not specific to what one employer or one employee does at one employer site. It allows them to cast a really wide net that says this is what you would, could, should be able to do based on your training, education, and skill set. That's not ideal for most physicians. Furthermore, the way they define total disability is not ideal. They will often say that in order to be totally disabled, you have to be unable to do your job as they've defined it and not be gainfully employed. Now, I will tell you, I used to say the old adage, I'd give my left arm to be home with my boys more. They were 4 and 6 when I got hurt. Turns out I gave my left arm to be home with the boys more, and after 6 weeks, honestly, I was ready to kill everybody. I'm just not meant to be a stay-at-home parent. I think they have the hardest job in the world. I'm just not cut out for it, and most of my physician friends and colleagues would agree. You don't want to have to worry about losing any or all of your benefit while you're trying to figure out what's next. And I will tell you, short of very catastrophic issues, most of the physicians that I've known go out on claim have figured out another way to be productive, if for no other reason to get out of the house. And there are other nuances that we see kind of time and time again in these policies that limit our ability to make a claim. Most of the time, mental health and substance abuse claims are limited to 1 to 2 years. There is a growing group of illnesses that they refer to as subjective illnesses. Think of things that don't have a pathognomonic test. Not everybody with a headache has a brain scan that's abnormal. Not everybody who suffers pain has a positive EMG. And they're limiting those payouts to 2 years. Most concerning, in the last 2 years, we've started to see limitations to musculoskeletal claims to 2 years. That is the number one reason that docs leave practice. And so, for all of these reasons, it is so important that we supplement our coverage with a private policy. So, what makes a private policy so important? And I would say number one is language. Now, I say specialty specific instead of own occupation because, again, they have different terms. They all basically mean the same thing. It depends on the carrier and the product design. The one that's different is the last one. What the first three will do is change the definition of total disability from disabled if you can't do your job and you're not working to you can't do your job regardless if you're gainfully employed in another occupation. And they truly hold you against yourself. They will look at your billing, your coding, your calendar for the 1 to 2 years leading up to a claim, and that will dictate what your specialty is. Now, what the transitional occupation definition does is add a phrase, and it says, until you earn your pre-disability earnings. Now, let that sit for a second. If we're saying that disability insurance is income replacement protection, what's wrong with that definition? Well, I got my policy as a first-year attending. I became disabled 10 years in. The transitional occupation definition does not take into account future earnings. I would never recommend that to a resident, to a fellow, to a young attending, because if I had gotten hurt in that first year, they would have only been responsible for paying me until I could find another job making that income. And again, most residents and fellows, they don't want to only be covered up to 50 to 70,000 a month. And I will tell you that every month for the last 12 and a half years, I've had to send in my bank statements and my company profit and loss statements. And there were months where the company did well. Even if I didn't take a distribution, I would lose my benefit because they would say I had equity in the company. If I could make what I was making my last year as an attending, would I need my disability insurance? Probably not, but it's not what I thought I purchased. I thought I purchased an own occupation policy, and I want people to be able to not worry about their finances should something happen to them early. Then we talk about what are the riders, and for some companies, that own occupation, true own occupation, etc., is a new rider. Riders are the building blocks that create the whole policy. But for some companies, it's built in, and you're not going to see it as a standalone charge. This list is all the different product designs for the ability to increase your coverage without additional medical underwriting. I say there's a pool of money. Everyone has money sitting somewhere that we have access to moving forward without giving medical information. We just have to say, this is how much money Dr. X is making. Here are Dr. X's benefits. What can we get? Now, I will caveat this. You see lots of terms here. There are only 5 carriers that really focus on physicians. You'll notice more than 5 terms here. That's because some of the carriers have multiple product designs. And you want to make sure that when you're speaking with an agent or a broker, that they're going through how does this get triggered? How often do you have to ask, are there things that you have to do in order to maintain it moving forward? So do not overlook this important piece of a policy. Every carrier has something called a residual or partial benefit. This is a benefit that kicks in if you have to go part-time because of injury or illness, not by choice. Think of things that cause fatigue, where your treating physician says, look, you can do your job, but you just can't do it full-time. And I tell people, think of things that cause fatigue. MS, other autoimmune diseases, early degenerative diseases, trying to work through chemo or other medical modalities, where you're going to take a pay cut. This rider gets triggered and it'll help you bridge the gap. And so some of the carriers are triggered when you lose 15% of your income, some when you lose 20% of your income. And one carrier will actually look at loss of time in the beginning. And so again, just important that you're going over what the definitions mean. I will say that there are more residual and partial claims filed and paid every year rather than total. So I do think that it is super important. I will also say nothing is actually meant to make us whole. There has to be a theoretical incentive for us to get back to work. There's something called a cost of living adjustment, or COLA. This is inflationary protection while you are on claim. So you're sick or injured, they're paying you. As you hit your anniversary, your benefit will go up based on the language in the policy. Should not come as a surprise that there are differences. Some give you a range, some have a specific number, some it's simple compounded interest or simple interest, some it's compounded interest. You want to know what you're being shown. Now, there's something called a catastrophic benefit, which interestingly is exactly what it sounds like. In the event that something awful happens and you are left unable to perform 2 or more of your activities of daily living without assistance, or you are severely cognitively impaired, you would get an additional benefit. So it becomes X plus Y. X is your monthly benefit, Y is the catastrophic benefit. Admittedly, it's probably the most hotly debated benefit. I'm of the ilk, I'd rather have it and not need it than need it and not have it. However, if I'm speaking to somebody and they are trying to shave cost wherever they can, and they say, hey, Steph, what's the first thing you would get rid of? It would be the first thing I would get rid of. I would rather see someone maximize their monthly benefit and forego the catastrophic benefit rather than lowering their monthly benefit. When we look at data, you are more likely to need your monthly benefit than you are the catastrophic benefit. Last but not least, mental health and substance abuse. This coverage swings back and forth every couple of years. Right now, you can see that there are a myriad of designs. It varies by carrier, by state, and by occupational class. There are certain physicians, EM, anesthesia, pain, that currently can only get a 24-month benefit for mental health and substance abuse. In California, it's a bunch of other physicians. So you have to figure out kind of where do you land, and you want to discuss these options with whomever you're speaking to. So that's kind of the DI 101 in a few minutes. If you have any basic questions or even complicated questions, you can put them in the chat and I will certainly answer them. One of the things I like to go over when discussing disability insurance is really what are some of the roadblocks that we can maybe change behavior and help get better outcomes. One of the things that I'm actually surprised on a regular basis is how many physicians are writing their own scripts or having their friends write their prescriptions. This is not, I'm on call, I have a UTI, for the love of God, please write me for Bactrim and Peridium. There are certain classes that the carriers will look at and will potentially cause them not to offer a policy. Antidepressants, anxiolytics, sleep agents, narcotics, weight loss drugs, ADHD meds, high dose steroids, infertility drugs. The carriers view this as unethical, like you're trying to hide something. And for some, it becomes insurance fraud. We've seen people write prescriptions for their dogs under their name, for their parents under their name. If you are engaged in any of this behavior, please stop. They will not entertain an application until you have had clean behavior for 1 to 2 years. That means you don't have people writing your prescriptions that aren't your treating physicians. You're not writing your own. It is so important that there is a EMR trail for the meds that you're taking. They want to see that you're getting proper follow-up. If a friend asks you to write them a prescription, the first thing you should ask them is, do they have a disability policy? If the answer is no, you're doing them a disservice. They need that same follow-up. Women's health. Women tend to wait a little bit too long to get their policies. We know that putting off family planning for education and employment puts us at higher risk for miscarriage and the need for infertility help. If you've had a miscarriage in the 12 months leading up to an application, they're not going to cover future pregnancy until you have a happy, healthy, normal pregnancy, delivery, and postpartum course. If the word infertility is anywhere in your medical records, they're not going to cover infertility and pregnancy. If you've had gestational diabetes, preeclampsia, they're not going to cover future pregnancies. When I first started doing this, anyone that had a C-section for any reason, they wouldn't cover future pregnancies. I went ballistic. I make breech babies. I literally asked underwriters to name me 3 hospitals in Pennsylvania that would let me go in and have a vaginal breech delivery. There are none. And so I've actually been able to affect change in underwriting and how they write the exclusion language. 4 of the 5 carriers will now write it as, we're not going to cover complications of a future C-section. That's very different than, we're not going to cover pregnancy. The one company that no longer does that used to. They swung back about 1.5 years ago. So I don't recommend that carrier if I'm speaking to somebody that's had a C-section for breech. Screening tests don't always make sense. If you've had an abnormal pap smear, they want 2 negative paps, negative HPV, before they'll cover your cervix. One company won't cover your cervix or uterus. It doesn't make medical sense. When I pushed back and asked why, I swear they said it's because they're connected. I've not been able to change that one, and it's infuriating. So again, I don't recommend that company if I know about an abnormal test. So the takeaway, women, please, before the first time you think about getting pregnant, please get this in place. Screening tests, there's really not a whole lot we can do about it, but part of why I do what I do is to manage realistic expectations. I want people going into the application process understanding what may happen during that underwriting. BMI, you can be too big or too small. We know that the BMI charts that are usually used currently are based on Eastern European Caucasian men, and a lot of physicians no longer fit that paradigm. It's one of the few things that adds cost, and so you want to be as healthy as you can going into underwriting. I have been able to affect change on people that are constitutionally small. We just have to prove stability over a course of several years. Right now, as weight loss drugs are becoming more kind of, I don't want to say normal, but more prolific. The carriers don't really know what to do because they don't have great long-term data. For most of the companies, they will look at how much weight have you lost in the last 12 months. They will add back half. They want to see that you've had a normal hemoglobin A1C and that you're truly being prescribed this medication for weight loss and not for prediabetes or diabetes. One company will not give you the rider to increase your coverage without additional medical information if you're on a weight loss drug. So again, it is important to understand which carriers you're looking at. And lastly, EMR sweep. Please remember that things that get checked do not get unchecked unless somebody physically unchecks it. We've run into a lot of issues where an active problem is really not an active problem anymore. A social history has changed, but nobody ever documented it. Please, for like the next year, whenever you go see a physician, look over the MA, PA, whomever is doing your intake, and make sure that your EMR is correct. Okay, now we're going to pivot. Life insurance. So why get life insurance, right? Who needs it? Well, almost everybody, actually. I can make an argument, right, that we don't need it until you have a responsibility for another human being. So, right, so I don't really promote kids having life insurance. I don't promote adolescents, young adults. Once you're an adult, there are reasons to get it, even though you don't necessarily have family. And that's for estate planning, legacy planning, right? So one of the caveats for the people with responsibilities to others, women, you need to get your first life insurance policy put in place before you get pregnant. Things like gestational diabetes and preeclampsia can as much as double to quadruple your cost for life insurance. So please, 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 women, before you try to get pregnant. People with estates to protect, again, as I was saying, estate planning. I hope that we all make enough money that we need estate planning. People who want to leave a legacy, right? You can leave it to a charity or a foundation that means a lot to you. Business owners can use life insurance to protect their employees. And if they have somebody who they really would need to replace if they passed away, the company can actually be the beneficiary of a life insurance policy. Similarly to group disability policies, group life insurance tends to have some pitfalls. You don't get the same control, flexibility, or portability with a policy that you're getting from work. Oftentimes, they also tend to be employment dependent. So you leave one employer, you're not going to take that policy with you. Often, it's less than you need. Most group policies will go, 2x, 3x your income. But when we talk about high earners, especially in the young years, right, raising kids, people need like 10 to 15 times their income to really protect their families. And so what I often recommend is for most people, and again, I'm painting with a wide brush, take whatever your employer will give you that does not require medical underwriting and look at it as a bonus. Most of us are also not going to pass away during our employment years. It's usually after we retire. And so in very few circumstances do I recommend that people pay more for more through their employer. People will often ask, again, when do I purchase life insurance? The kitschy answer is when you least expect to need it, right? While you're young and healthy and you can actually get a good price. I tend to think in important life events, right? Birth of a child, again, for women, really should be before pregnancy. If you're getting married, unfortunately, if you're getting divorced, I've seen a lot of divorce paperwork that mandates that one person have life insurance with the other as the beneficiary, especially if kids are involved. Purchase of a new home, mortgage, right? I will typically recommend that folks have life insurance to cover a mortgage. The last thing a child wants is to lose a parent and get told they have to move out of their childhood home. So, at the very least, you should have enough insurance to cover the mortgage. If you get a new job or you're purchasing a business, again, when we look at multiple financial input for young physicians who are high earners, so over 6 figures, the common paradigm is that you should have either $1 million a child or 10 to 15 times your income, and then you roll in debt that won't die with you. So mortgages, small business loans, educational loans that someone had to co-sign. Again, caveat, most educational loans are forgiven upon death. If you're not sure about yours, contact your lender. What types of life insurance are there? Well, I will tell you, when I am speaking with young physicians, with young families, I'm usually only talking about term life. However, life insurance does come in two major flavors. You have term and you have permanent. Term is good for a short duration of time, 10 years, 20 years, 30 years. There are some carriers now that'll go out to 40. It's essentially paying rent on your life, but it's a lot less expensive than a permanent product. Permanent life insurance is actually an umbrella name. It encompasses whole, universal, indexed, and variable life insurance. These are products that have a definitive death benefit as long as you pay your premiums, which tend to be more expensive. And again, they vary in risk. And so whole life is the most low maintenance. It has level premiums. You may get dividends. It accumulates cash value, tax deferred. That's the least risky. And then you go down the list. And so universal, indexed, with variable being the most risky. I'm not going to spend a whole lot of time talking about permanent life because truly, for a large majority of physicians, term is really all they need. If I'm speaking to somebody where permanent makes sense, it's a very individualized conversation. As I mentioned before, when we talk about how much is the right number, as I mentioned, kind of those two paradigms before, there's no right number. It really comes down to what are you comfortable with? What are you and your partner comfortable with when you put your head on the pillow at night, when you get behind the wheel of a car? I will also say that there are very complicated software systems out there right now, which will put in everything from every asset, every liability that you have, and kick out a number versus kind of that basic 10 to 15x, 1 million a child. And so there really is no right number. When I talk in those two paradigms, I find that most people's sweet spot is somewhere in the middle. There are differences where you are in your career, right? So early career, most of us are starting to make families. Your need is a lot. Raising kids is really expensive. When the kids start leaving the nest, well, now you may not need as much. Later in your career, right? You're approaching retirement. Are you able to self-fund? Do you even need to carry life insurance? And at this point, we need to maybe talk about permanent life insurance. Do you need or want a definitive death benefit? And so not only do your needs change over time, but how much you need is going to change over time. All right. How do you read your policy? Well, I'm going to be honest. You probably don't really want to, but you should. And you want to look at what are the definitions of the terms, and all policies are going to have a glossary. With disability insurance, you want to make sure you understand what they are and are not covering. So what they're not covering is called exclusions. So if you have any pre-existing medical issues, they're not going to want to cover that, right? Our job as brokers is to get you the best policy. Their job as underwriters is to keep their company afloat and figure out what can we not cover. And you want to understand what that means. Do they have a reconsideration? So is it you broke your leg a year ago, so they don't want to cover your leg now? But they may say, look, come back to us in 2 years, and if you're symptom-free and treatment-free, we can go ahead and get you covered again. Are there ratings? Is the policy more expensive because of BMI? Is it more expensive because of a certain health condition? You want to understand what it is that you're paying for. And a lot of these policies are dozens and dozens of pages long. And you may want someone else who's doing it on a regular basis go through it with you so that you understand all that you're getting and not getting. With contract language, as I said kind of in the beginning, right, we want to know what are the base policy features, right? So what overall are you getting covered for? With life insurance, is there a conversion option on your term life? So there's something called convertible term. I'm actually a big fan. What it does is guarantee your future insurability. So you get a term policy, hopefully while you're young and healthy. If something in your health should change before the end of the term, where you might be hard to insure again or even uninsurable, if there's a convertibility option, you can convert part or all of that policy into a permanent product without additional medical information. So you want to know if that's an option. You want to know, is your policy portable, right? Again, most group policies are not. Every now and again, I'll see one that is. Private policies, I have yet to see one not portable. Something that most people don't really talk about, but actually most, if not all, group policies are governed by something called ERISA, which was actually started by the government for retirement plans, but has somehow eked its way over to disability and life insurance. Basically, this changes how you can make a claim and how you can appeal a claim. And it gets a little nitty gritty, but for some policies, really important to understand. And this is something that your agent or broker can explain to you. Navigating the process. And I realize, guys, I'm giving you a ton of information in a short period of time. I'm happy to answer any and all questions moving forward. What should you expect with an application? Well, it depends. It depends on what type of coverage you're getting and how much of it you're getting. So for the most part, expect to have your medical history, your pharmaceutical history, your motor vehicle history reviewed. For disability insurance under a certain limit, and it differs by carrier, you may or may not have to give fluids, blood, urine, etc. For some, over a certain amount, you do. For life insurance, it's the same thing. Some carriers will now have fluidless options. I will tell you, anecdotally, a lot of our physicians are falling out of the accelerated underwriting being the fluidless. I don't know if it's because we go to doctors more, so we have more documented, but truthfully, I don't really show fluidless options anymore because I don't want people to waste time going through the fluidless only to get bounced back into the fluids. There is an ask for financial proof. So your W-2, your 1099, your tax reviews, a current pay stub. For disability insurance, we can only cover what we can show, right? What we can prove. And so for some people, they might need a year of income before we can get them maximally covered. For bonuses, they want to see it more than 1 year. If you are self-employed, things get a little dicey here. We can only cover what you pay taxes on. So if your accountant is putting a lot of deductions and your adjusted gross income is much lower, you're not paying a lot of taxes, but we also can't get you a ton of disability insurance. So that's another important factor if you're self-employed. Most of the carriers will want a phone interview. They want to make sure that you are who you say you are on the application. And so many applications now are done sight unseen, right? We do everything over email and Zoom, etc. And so they want to make sure that they give you an opportunity to make sure that everything in your application is appropriate and true. It can be pretty invasive. Life insurance, they're also going to make sure that you've, never performed a felony or had a problem with the law. We've run into a few of those issues. And so anything in your history is discoverable. I don't know how they get all the information that they get, but I always tell people there are no secrets from the insurance company. Timing of applications matters more for disability than life insurance. The biggest reason that we tell trainees to get disability insurance while they're in training is because there are huge discounts that happen during training that would disappear if you waited until you were an attending. It saves you thousands over the life of the policy. Again, women, we want both actually before pregnancy. When do you increase, right? Residency to fellowship, fellowship to attendinghood, any of these big jumps in earnings, we want to make sure that you're being appropriately taken care of. For disability, they're called adjustment applications. We just need, again, to give them financials and benefits to get an answer. Timing for life insurance, as I mentioned before, big life events, women before you get pregnant. Why does physician advocacy matter? Well, I will tell you that I like to think that bringing my medical knowledge and insurance knowledge together helps get the best outcomes possible. We want to be able to manage realistic expectations. Again, asking all of those medical questions up front helps us go into the application process eyes wide open. And because there is open dialogue with the underwriters, we've actually been able to affect change in exclusion language in the underwriting process. And so it's so important that we have physicians taking care of physicians, in my opinion. So what do we do now? If you have a policy, now's a great time to review it. Make sure that you understand it. Please connect. We can audit current policies. We can look at whether you should have a new policy. Where are you in your career? What do you need? And we can do it all under the same earned house that you have everything else under. So feel free to reach out with any questions to start the conversation, and I'm going to hand it back to Amber.
Dr. Pearson, that was amazing information. Thank you so much. I now need to check my own policy. I have a lot, as a woman, we have a lot to balance, and policy is definitely something that we all need to dive in a little bit more and take a little bit more care into. So we appreciate all the nuanced information. It's a lot to take in, but we hope that the audience, really resonated with some of those takeaways. Like Dr. Pearson said, she is in the community. She is on social media. We would love for you to connect with her. She has her email here, ready to take on a consult. You'll see, you will see right now, I have put on the screen, connect with our team. Stephanie has a great team with her. Scott Ravitz, DC Kelly, Lee George, they are wonderful to connect with as well. Their emails are also on the screen. We also have our Earn social medias where you can connect with us as well. We would love for you to participate, see all the amazing things that we are doing for our doctors, their families, and their practices. And of course, last but not least is we have even more we can offer you. As Dr. Pearson stated, it's not just insurance, it is the well-balanced machine that Earned has created for all of you to take advantage of. The financial planning, the investments, the trust, the tax, the career advisory, and now we have legal coordination with our attorneys on board. And our insurance is just a small component of, but it's a powerful component of our well-balanced financial life for doctors, physicians, and the like. So again, click that link at the bottom, connect with our team. We'd love to give you a free consult and really help you figure out what you need to just make your life easier. And I'd love to bring on Jorge. Please join us on the screen again, because we'd like to talk about some questions that we may have for Dr. Pearson.
Great. No, thank you. Thank you, Stephanie. Amazing webinar, very informative.
Thank you.
The thing with Earned, and she's joined Earned, the Earned team. We've been working with Earned for over 2 years. What I love about Earned is this ecosystem of where it's one-stop shopping. You have accounting, you have financial advice, now you have insurance management and estate planning. So the key thing is, one thing is that in estate planning, guess what? Your insurance is part of the whole thing. And that's important to have one situation where everybody's talking to each other. So that's amazing. I love that. The other thing about Earned is we've been working with them and partnering with them to develop our Physician on Fire mobile app. I call it your chief financial officer in your pocket, your CFO in your pocket. You can track your accounts, you can try and count your net worth. We've worked with them extensively to polish that application. And in there, you could also get our content, our educational content on how to fire. You could be a fast fire, coast fire, whatever flavor of fire that you are, we have educational material for you. So if you guys have any questions, please shoot them. I have my own questions. While Amber's getting the questions loaded up, one question, Stephanie, I have is, what's the most common mistake that you see physicians making when it comes to insurance, besides not getting one, not having
Yeah,
one?
I mean, that is obviously the number one issue. The second is not getting enough. It's saying, okay, I have this, but they don't think about maximizing their benefits along the same line. And I hate being a naysayer, but it's people thinking that their spouse is their insurance. And unfortunately, we still see a high divorce rate in the physician space and doctor space. And I hate getting a phone call from somebody in their mid 40s or even, younger, saying, I'm in the midst of getting divorced and now I need to get insurance. And so, I think it's really, really important, even in a dual income household, that both people have coverage.
Amber, do we have any questions?
We don't have any questions thus far. Again, I'm encouraging people to ask questions. We know that insurance is personal. And so it really makes sense that if you don't feel comfortable, asking questions online, to really connect with Stephanie. I'm actually going to pull us back to Stephanie's contact page. You can take down her email. She would love to hear from you personally. Again, click that link to connect with our team. But if we don't have any questions, Jorge, I'd love for you to kind of really give us a good summary of those key takeaways.
Sure. Let me just ask one question that I was curious about, the convertibility.
Yes.
If I buy convertible term and my health declines, like how can I convert the entire policy?
It does vary by policies, but for the majority of them, you can convert the whole policy.
Got it. And then now one thing about, because most 80% of physicians are employed as W-2s. What do you do if you're like a W-2 and you have a hybrid model? Like you do W-2 and you have a lot of side gigs at 1099.
So it depends. So one of the issues that we run into on the disability side is it depends on how much time and what percentage of money you're getting from your side gig. There are situations where the carrier will now see you as double employed, right? So say you're a physician and you have a ton of rental homes and you actually have a property management company, right? They're going to look at both of those. And so we need to make sure that if something happens, it may be that you're residually disabled instead of a total disability if you're somebody who's making a remarkable amount of money in a side gig. From a how much coverage can we get you, we can usually cover everything. But again, it's really individualized and kind of what is it that you're doing. Like right now, coaching is not an insurable entity. And we see a lot of docs going into life coaching and financial coaching. It's just not being recognized right now as an insurable occupation. However, right, property management is. And so it really depends on what are you doing, how much money are you making, what percentage of your time is spent in each of those buckets.
Got it. Great. All right. So some key takeaways from me is three that I can think of is one is, timing costs money, right? Sometimes thousands. The big thing I got from you is that career transitions from resident to fellow to attending or resident to attending, there are windows where you can increase the disability coverage. So when you do these transitions, please take some time, look at what you have and just get assessed and bring it to Stephanie and their team, and they'll give you a real value of where you're at and what you need to have. And if you delay that, you're definitely eventually leaving money on the table. Number two, it looks like group coverage looks safe, but it has some traps in it. Again, employer paid disability benefits get taxed when you file a claim. And you have to manage that and manage expectations from that. And the last one that woke my eyes up to is that your EMR is a liability in underwriting. The underwriters can pull your full medical record and your pharmaceutical history. And again, all these meds, antidepressants, ADHD, weight loss drugs, even past pregnancy complications can be triggers, and you should manage that and be prepared for them and anticipate those. So those are key things that I got from that. Again, for everybody, thank you for stopping by today. Thank you for another fantastic webinar earned. You'll be getting an email with a link that you can see this webinar in its entirety should you have to call and see patients or you came in late. Again, thank you very much, and you have a great day. We'll see you soon. Take care.
Awesome. Thank you, Dr. Pearson. Thank you, Dr. Sanchez. Appreciate everyone being here today.
Thank you for having me. Nice seeing you, Dr. Sanchez.
Same here, Stephanie. Have a great one.